All right, let's take us through how investors are playing the market and what's been evidenced in the data. We like that. A lot of this from retail investors, of course, as well, which gives us an idea of where the money is going. And Gemma Dale is joining us from nabtrade. For that, Gemma, I feel like we haven't spoken in forever. Really good to see you there.
It's lovely to see you too.
Yeah, look, it's been a week, hasn't it? So let's get company specific just to start.
Sure.
We've had Afterpay moving into the banking space. We've had Zip getting hammered yesterday. Short sellers are more interested in that company now as well. So in that buy now, pay later space, what have you been seeing on the platform?
Yeah, it's such a good question. Afterpay, it's been pretty quiet. I've seen not a lot of action in Afterpay. It's been one of those massively loved stocks. People understand the story, they understand the value proposition, they probably use it in many cases when we look at actually who buys it and who holds it. Although a lot of our older investors were also buying it a few years ago. So the most interesting thing about Afterpay is it's been in our numbers for a long time. This is not a new story. It wasn't new last year either. It had been in there for 2 to 3 years prior. So a lot of our investors got in pretty close to the listing and have sort of ridden that wave and had a lovely time. What we saw with it when it rocketed right up to 160, we saw a lot of profit taking on the way up. For those who missed that peak and then it fell back as low as 85 quite recently, they've tried to take profits as it's come back up again. So they've been a little bit more on the profit taking side. We don't see as much buying in it. But Zip's done something very different. So Afterpay's kind of gone to the sidelines, except for those who are interested in profit taking where they can. They don't want to miss that run up again. For Zip, it's become a trading stock. So Fortescue is our most traded stock by a very sizable margin, but very frequently if there's a big move in the price, it will be right after it because it just has more than enough volatility to keep people interested. So Zip has been obviously bouncing around all over the show. We saw a 15% increase a couple of weeks ago. We saw a fall. It's been everywhere, down 7% yesterday. That was an 80% buy on that fall. So we saw plenty of people seeing that as an opportunity. Obviously the numbers were very strong, but nowhere near strong enough to comfort the market that has been pricing in quite spectacular performance, worried about rising arrears. Obviously, in the current environment, if you've got a fairly sizable domestic market and a whole lot of young people are laid off at the moment, that would be something that concerns you. Higher marketing costs with the QuadPay acquisition, all that kind of stuff is concerning the market, but it was not concerning our investors. We saw plenty of people buying it.
This is why this information is so fascinating. So I'd like to talk about the miners. It's been a big week for quarterlies, BHP, Rio Tinto. We've also, though, seen a lot of those lithium players coming out with quarterlies. However, just to add the cherry on top, we've got iron ore prices falling below that $200 per metric ton level. Does the price of iron ore usually have an impact on what people are thinking toward those miners when we've also got reporting season around the corner? This is like the longest question ever, Gemma, but we've got so many factors impacting the metals and mining space right now. So how's it being played?
So as I said, Fortescue is number one, and it's quite fascinating to me in that iron ore would not have been a major factor for our investors some years ago, but there's a core group of investors who fully understand and follow the iron ore price incredibly closely because it has been at elevated levels. Obviously, that drop below $200 is interesting, but it's been mooted for such a long time. Treasury have been predicting iron ore prices at $50, and then they went wild and increased it to $55 for years now. So the excess profit in the iron ore sector in particular has been astonishing, and it's lasted a lot longer than a lot of people would have anticipated. For our investors, they're quite happy to trade that, and Fortescue is traded in very, very large volumes by wealthy investors. It's not necessarily at the bottom end of our trading volumes in terms of smaller sizes. It's mostly investors moving hundreds of thousands of dollars at a time, potentially millions, to take advantage of those small movements in the price because they're getting those trading profits. I mentioned Zip was quite similar. So those two are the trading stocks, but Zip is small trades, Fortescue is massive trades from people who look at the iron ore price very closely and take a fairly fairly well-informed punt about what the price is going to do the next day as a result of the overnight movements. In terms of the rest of the mining sector and the resources sector, obviously so much news out at the moment. What we saw with all those bounces yesterday, and we saw a whole series of bounces yesterday. So with Pilbara Minerals, we saw Linus, we saw Galaxy, we saw Orocobre, all of those guys having a fair bit of movement. If the price moves up by close to 10%, we see very aggressive selling, very aggressive. So people taking profits across the board with those. Anything that's on a bit of weakness, we might see some buying if it's a quality asset.
And can I ask about CSL? I did mention that today, in fact, this week, it's done pretty well. It's up by 1.7%. So do people start to trim? How do they handle it?
CSL's really interesting. I've mentioned before, it's a really high conviction stock for us, but it's really broadened in the portfolio over the last 12 months. A lot of investors didn't hold it because they just felt it was too expensive. And suddenly something that's $200-300 is just way out of people's price point. Understanding that it was on a multiple of sort of 60 plus times prior to COVID, right? So for a lot of people, they were like, nah, that's just way out of my price range. And I wanted to buy it back at $15. I missed that window. I'm not going to buy it at all. So we had a small group of people who'd rode it all the way up and had a great time, and plenty of other people who never took that opportunity. But when it was at $350, down at $250 during COVID, bounced up to 310 and then back at 250. We suddenly saw this massive influx of people earlier in 2021, not in 2020, buying it. It wasn't a popular stock to buy during COVID. It has been a very popular stock to buy this year. But around the $290 mark, suddenly it looks like something to take profits on. So we're actually seeing quite a bit of trimming on it at the moment. The falling Aussie dollar is an unexpected tailwind. So quite a few people have taken the opportunity to kind of trim that down a bit.
Got it. Gemma, I had a conversation yesterday with somebody who works in ETFs saying that in this most recent lockdown, Sydney, Melbourne, their phone's ringing off the hook. So the sentiment is, or the thinking is, that a lot of people who are locked down at home are now once again got a bit of time on their hands and getting interested in the market. Are you seeing evidence of that at nabtrade?
Oh, that's such an interesting question. So two things would give us evidence of that, actually. One is that new account openings are still much higher than you would anticipate. We saw huge volumes of new accounts last year, absolutely astonishing, right across the market, not just us, massive numbers of people increasing or getting into the share market for the first time, right? They weren't changing brokers, they were just opening new accounts. And that was running at like 5 times the average in March, as it was at 3 times the average in April. It's still running at about twice the average prior to COVID. So it's still very high, given that we would have imagined if you ever wanted to trade shares, you'd be doing it by now. But clearly there are still those who are wanting the opportunity to come to market. And that point about ETFs is really interesting. We are seeing more and more ETF buying, and we are seeing them in the top 10 and the top 20 frequently in our trade volumes, which is amazing. We would never have seen that a couple of years ago. It's worth noting that ETF volumes are only like 4%, maybe 5% of total volumes, and they're only 4 to 5% of total holdings. So we talk about ETFs a lot, but they are still a really small proportion overall of what people hold and what they trade. And yet we're consistently seeing them in the top 10. It tells me a lot of people are still just trying to get exposure and build a portfolio, and they're doing it consistently at a time when a lot of other investors have gone to the sidelines. They don't like record highs. It makes them nervous. And so our existing investors are on the sidelines, but new investors are taking the time to come in.
Interesting. And just to push the point a bit, have you seen a noticeable uptick over the past 4 weeks, with Sydney in lockdown?
Probably yes. If I look at the number that are in the top 10, so seeing individual days where ETFs are in the top 10, yes, that would not be something we would have seen 3 or 4 months ago. It is something I'm seeing maybe once or twice a week. When we had weakness earlier this week, we saw heaps of ETF buying for people who just wanted to buy the dip, which is quite telling, really. That is, people are going, I know to buy the dip. There's a dip coming. I'm going to get on that.
Yeah, so fascinating. Gemma, listen, have a good weekend. I'm sure it'll be a quiet one, but that's good for us in some ways, right? Let's look at the silver lining. Take care. We'll see you soon.
Sounds great. See you soon.